Folks, welcome to Thursday Night Stock Charts Live. Thanks for being here. We have a lot to go over. Uh, really, the big question on a lot of people's minds is this the top? Did we put in the top? Are we ready for a crash in the stock market? Did Tesla, did Netflix, did they set the stage for a sell-off in the market? The question is maybe. Well, the answer is maybe. It's not definitive as of yet. Would we go walking in here getting net short the market, selling all your longs? No, there's reasons necessarily in certain areas of this market to be bullish. So we're going to go over the weekly charts. We're going to talk about the setups of where money's rotating into and rotating out of. We're going to talk about a rot, an absolute rot in this country, and the damage that's being willfully employed to damage this country, while all the while we have another stage of a wave, I should say, of inflation getting ready to rear its ugly head. We have rate hikes that are looking forward out until minimum December. Stop to December. The markets are expecting more rate hikes. So we're going to go over a bunch of headlines, and you're going to have to make the decision as to whether or not you believe that this market is done. And let's start off by saying hello to people, and I will share my screen. Sean, welcome. Good day today. Franklin, the man. Donnie, welcome. Talon, the man, the mission, welcome. Okay, guys. So I'm going to share my screen and we're going to get to it. And I got to be honest with you. I was preparing for the show tonight and I came upon something. I try not to talk about politics that does not relate to the stock market. And some people out there are going to be like, I didn't tune into this to hear about politics. But this is related to this bit of politics is related to the stock market because there's a massive trend that's out there. It's a rot. It's a rot within the system, and I need to make a decision very, very soon about what direction I'm going to take with this channel and with YouTube because there are certain things that I can deal with, but the child sex trafficking and the pedophilia, I mean, in my gut, I have a visceral reaction to it. I can't watch it. I can't watch this stuff. And I'm on Twitter and I'm watching these. There's a group out there that coaxes pedophiles. They pretend as if they're 13 years old and they're talking to a pedophile to come out into the open, meet up with them. And these guys come out, and there's videos of it all over on Twitter. There's one group, and they do a great job. They call the cops right then and there. And most of these people are known. They're known as pedophiles. And the cops immediately arrest them. Lord knows if they ever go to jail or not in this day and age. They probably get a medal in this day and age. But preparing for the show, I ran across this, and I haven't seen this movie yet. But and if YouTube wants to strike the video, I really don't care. To be honest with you, I'll leave. I'll go elsewhere. It doesn't matter to me. I think they shadow banned me. My channel, my subscriber growth in this channel stopped growing a long time ago, so it's okay. It is what it is. I have to be me, and this headline is up here. YouTube is pulling Sound of Freedom interviews. YouTube appears to be removing content. And for you folks that are not familiar, Sound of Freedom is a movie out there that has to deal with child sex trafficking. I haven't seen it. I don't know whether it's I hear it's a good movie. I can't tell you anything more about it. I hear it's very emotional. YouTube appears to be removing content featuring or even merely reviewing the movie Sound of Freedom. I'm purposely saying this so the algorithm can pick up what I'm saying and see if they delete the film. Give me a strike. I don't care. Violating community guidelines as censorship of the anti-child trafficking movie continues. So YouTube is the second largest uh, search engine in the world, with Google being the first. Google owns YouTube. They control what we see. They control what we see. And I tried to validate whether or not this was accurate. And I know this guy, Luke Rudowski, and he did a video about Sound of Freedom. What did they do? They struck his channel. And this guy, he's a conservative. He's not a hyperbolic guy. He's just a fact-based guy. He's a nice guy. And they struck his channel. So, this is just another straw on the camel's back. So I really need to get set up with Rumble. They make it very, very difficult on Rumble uh, to get videos streamed over on Rumble. I don't know why they make it so difficult, but I'm on Twitter. I used to be on Facebook. I stopped streaming to Facebook because I just can't stand them. But I'm at a crossroads here with YouTube, to be honest with you. So it's just morals. Yeah, there's a certain level of ethics I have to have, and I'm at the precipice of saying I can't stream here. I don't want to do business with YouTube anymore if they're going to pull this type of stuff. I can't do it. It's not me. I don't want to go hopefully purgatory, and they let me in and be judged by. And I'm not overly religious, but I believe in God, and this is just crossing the lines, man. I mean, these people that do pedophilia, they need to rot in hell. So uh, the rot continues, and this is a general theme, and I'm going to get to the markets in a moment. But you have to understand, it's not just about a chart. It's the driver of the chart. What's driving the chart? One direction or the next. There's an underlying fragility in our system where we cannot handle too much pressure on this economy because it'll snap very, very easily. There are no morals. There are no morals anymore in the mainstream. With the people, yes, there are. With those in the C-suite of many S&P 500 companies, they're afraid to speak. So there's a rot, there's a decay out there, and you fast forward to this video here, and hopefully I'm going to stop sharing. I want to make sure I clicked a certain button because you won't be able to hear the audio. I did. Okay, good. This is from Twitter, released only a few minutes ago. And this is from Senator Chuck Grassley. Okay, so the document that the senator is talking about is here, right here. I'm gonna blow it up at the headline off of Zero Hedge. This just came out at 4:20 this afternoon. Grassley releases bombshell FBI document discussing $10 million Biden bribe through Burisma. That's the oil and gas company, I believe, natural gas company over in the Ukraine. Hunter, dumber than dog. We don't care about Hunter Biden. I don't care about Hunter Biden. I care about his father. I care about the deep state. And uh, here's the document. And when I say the deep state, I'm talking about the FBI. Now, this document It took the senator a year to get. They've had this document since 2020. This is the FBI. They did nothing with it. So this is unclassified document from the FBI, accusation that they were paid $10 million and the FBI did nothing. What do I have to say about this? Nothing. The only thing I could do or say about this is that it goes to the theme that there's a rot. The institutions in this country are corrupt. I'm not saying that the soldiers on the street, I'm saying those in power are corrupt. And as the lights begin to shine on these people, they're going to become more and more desperate, because if and when there's a change of government, especially if you get a Trump in office and you get a DOJ, if you get a guy like Matt Gaetz, he's a congressman out of Florida. If you get a guy like him that becomes attorney general, you're going to see people committing suicide to avoid prosecution. So it's a drumbeat of never ending corruption that's in our face. They don't care. And we can go on here. Top lawmakers question top official, a lawmaker questions top official over proposed gas ban. They say they don't want to ban gas stoves. They want to have more constraints on their, what do they call it? I forget what they called it. They want it to be more efficient. So if you want to 94%, they say that you could buy a new gas stove, but it has to be a new energy efficient gas stove. It has to meet certain criteria. So there's only 4% of gas stoves out there that currently meet the government's criteria. 96% of gas stoves would need to be replaced with a more expensive unit or go to electric. And they want to push people to electric. Why? We haven't revamped the electrical grid in this country in 50 years. It's kept together by shoestrings and bubble gum. Yet they want more and more electric cars sucking out of that grid. They want now they don't want gas stoves. They want electric stoves that are going to suck off of that grid. They're going to do it in the name of climate change. A lot of these power companies that power the electric grid, they're using coal. They're using coal, natural gas, some oil. I mean, and nuclear, of course. This is just the continued rot of this system. And at some point in time, there's going to be a breaking point. It's as sure as God made green little apples, there's going to be a breaking point. I've gone over time and time again. The yield curve, the stage is set for an inversion and a very nasty sell-off in the stock market. Is today the first step? I don't know. I'm not that smart. I will watch the charts. We went into the day short. We did book some profits. We do plan on shorting again into any type of strength. But will we go net short of the market right here, right now? No. And we're going to talk about the whys in a moment. And we'll talk about what we need to see in order for us to get net short. So stick around. We have a lot to go over today. I got to blow through these. So this is from Michael Kramer. He posts some good stuff, but to be honest, he's a perma bear. Oh, you guys could be sitting out there saying, well, you're a perma bear too, Bob. You're always talking negative when we go on these live streams about the economy, this, that, and the other thing. Well, nobody's telling me I'm wrong. The stock market's gone up. We've traded long the market by and large. I've been bullish on the market. I've given you the reasons why it shouldn't be going up. It doesn't mean that we weren't long. We have been neutral quite a bit, selling premium, generating cash flow, so we're quite profitable. We did, however, go into the day short the market. using long puts against the Qs. And we do own the SQQQ, not a huge position. We did add to it earlier in the week, but we took some off, and we'll go over the strategy of what our next move is going to be in the coming days. But getting back to Michael Kramer, he posts this updated from time to time. And what this is an analog chart of the S&P 500. Let me blow it up. And he's taking a date range from back in from 2006, to be specific, if you want to do this at home, March 5th, 2006 to 10/3/2008. So it's the run up to the peak of, that's in green, the run up to the peak in 2008. And then, of course, you have the sell off soon thereafter. Then you have overlaid in white is we are here. And you can see that it's eerily consistent with where we're at right now. Otherwise, I wouldn't share it. Are we more extended than usual beyond? Have we done a Wile E. Coyote moment and gone off the cliff here? Maybe, but if we do follow through to the downside, this is going to be a mind-boggling sell-off. So something to think about from another perspective. Now, when is this negated? Well, if we break out and above, a couple of resistance levels here, then of course, then this is all negated and it was just good entertainment. But something just to think about where we are in history. History repeats itself. It may not, well, let me rephrase. It may not always repeat itself, but it certainly does rhyme. Now, here's the weekly chart of the triple Qs. And obviously on the week now, we have a bearish key reversal. And we are now negative on the week. I had expected us to do a retest of the support level going into the new trading week, which is why we went into the week short of the Qs using put options. And we still may get there, but what I'm hoping for, daily chart, what I'm hoping for here is a rally back tomorrow. I want to see the talking heads on CNBC come out and say, no. You got to look at the earnings from J&J, divert attention, get you to talk about other things, get the worry off the table, and they'll talk up Tesla. You probably come up with a couple of upgrades of Tesla in the next couple of days or so, and Netflix too. Their earnings weren't bad per se, but it wasn't what the market needed. What the market needed was good news. And they got good news from the big banks ex Goldman Sachs. Goldman Sachs did not have good news. Tesla did not have good news. Netflix did not have good news. It wasn't horrible. Taiwan Semiconductor, the world's largest semiconductor maker, did not have good news. J&G is not going to hold the market. So these names here are priced to perfection, namely Tesla and Netflix. We went over this yesterday. Priced for perfection. They had to beat. They had to beat because it would justify what the markets want and expected, multiple expansion. How do we know? We know because we went into the week with a PE of over 31. We are still with a PE of 31.61. To support this type of multiple on the S&P 500, you need the triple Q names to hammer out solid results because it's only seven stocks that are driving up the S&P 500. You have names that are up out of the triple Qs 58% of the years, but the S&P 500 is up less than 10%. What's that all about? Let me validate that. I may be inaccurate about that. I hate being inaccurate. Sorry, 19.13. I knew I was wrong. 19.13 relative to the triple Qs, which are up 41.9%. So when you look at the earnings that are coming out of the names, out of the triple Qs, you must have those names beat because those are the drivers of the equity market. If they do not deliver, this market goes down. Or at least you get a correction in the technology names, sector rotation into other names. We don't need to go through this. This is just I will go through it because I brought it up. This is basically what I've been talking about for quite a while now, and that is the yield curve. This is a different view than what I put up normally. This is not quite updated, but close enough for government work. It's still heavily inverted. We're not seeing a serious steepening yet. At last look, we were down on the week. We're going to look in a moment to see whether or not we're up on the week when we go over the weekly charts. And the S&P 500 is completely blowing off the inversion of the yield curve. And it can do that. The however is when this yield curve begins to move up, S&P 500 stocks are going to tank. It's just the way it works. And so we went over the rot that's in the system. We have no leadership. We have corrupt leadership at best. Philly Fed manufacturing survey signals 10th straight month of contraction. No need to go into the numbers. It's the trend that matters. Complete paralysis. Just 1% of U.S. homes have changed hands in 2023, the lowest on record. Nobody wants to give up their 3% mortgage. They're not going to sell. Why? To move somewhere else where home prices have risen, and now you got to pay a much higher payment on a higher yield interest mortgage rate. Nobody's going to move. What impact does this have on the economy? Well, think about all the businesses that are related to housing that get no business. Just 1% of homes have changed hands in 2023. That's insanity. I don't know what the historical norm is. I'd like to see it here. I don't want to waste time because I have a hard stop. This is interesting. Wow. This goes back to these are home listings. Housing turnover per 1,000 properties. So home listings, and you can see that home listings are at lows. At least this goes back to 2012. So think about all the businesses associated, contractors, moving companies. You go into a new home. What do? You buy new furniture. You buy appliances. You go to Home Depot. You're not going to get that. So Teamsters issues strike notice at Yellow Freightways. You also have UPS out there. You also have the Screen Writers Guild that is on strike. What does that mean? Well, it means higher pay. And what does that mean for wages? They go up. What does that mean for the Federal Reserve? Federal Reserve gets nervous. What does that mean for the Federal Reserve and their actions with regard to interest rates? They need to pump up interest rates because they're afraid of wage inflation. Simple as that. So a lot of people are believing that the Federal Reserve is one and done, meaning a pause, and then we're going to see cuts. I don't know about that. That's not what the market is saying right now, and we're going to go over it in a moment. Existing home sales tumbled in June by the lowest since November of 2022. Now, that's not a long time, but it just goes to show you that business activity is slowing out there. Manufacturing slowing, housing slowing. You have strikes going on. What's going to happen when the Teamsters or UPS go on strike? The supply chain gets disrupted again. We know what happened the last time the supply chain got disrupted. I think Yellow Freightways is at least the top 2 or 3 freight movers in the country and in North America for that matter. Tightening of credit. New York Fed reports surge in credit application rejections. So people have blown out their credit cards. They're looking for new credit cards, except there's only one problem. They can't get more credit. What does that mean? They got to pay down their existing debt and they need to stop spending. That means they're going to save money. That's going to slow down the economy. Fast forward to commercial real estate. We've talked about this, but I thought this is a great uh, listogram of what's out there, what's going on in the commercial real estate market. I just posted an article in the members area where you had another big Starwood REIT came out and they just turned in their keys to a bank, a major development down in Atlanta, of all cities. Atlanta, booming city. And we're not talking about New York or San Francisco. This is Atlanta. So here, look at the millions, literally millions of vacant real estate, vacant buildings in New York. Hudson Yards alone, 2.5 million. Two Penn Plaza, one Penn Plaza, that's nearly 2.5 million. 2 Manhattan West, 2 million. I mean, we can just go on here. They're never going to, in our lifetimes, they're probably never going to fill this capacity with more business. They may have to turn these into condos and whatnot, but what does that do to the condo market in Manhattan? And all the while that we have this going on, let's go back and re-begin or relist what we talked about first. We have the rot, Grassley on Biden, the document released about the Federal Reserve. You have YouTube censoring a movie that is anti-pedophilia, anti-child sex trafficking. They're censoring people that are critical of or promoting the movie. Sick bastards. Sorry, family-friendly show, but that's pretty sick. And you have economic slowdown. You have commercial real estate, which is a nightmare, not just in New York, around the country. And you have the banks, which are supposed to be fixed, yet ever since the emergency bailout facility was provided to the regional banks, it's all been off the radar screen. You haven't heard anything about it. Why? Because the Fed's been bailing them out for the past 6 months. So, you can't make this up. And the proximate reason as to why these banks need this bailout facility is because the Federal Reserve raised rates too much. And what are they doing now? Well, here's the updated Fed's balance sheet. And they cut, and they should do this. I'm not saying they're wrong, but it's going to have a horrible impact on the economy because the banks are already seizing up. The Federal Reserve is reducing their balance sheet on one hand, yet bailing out banks on the other hand at the same exact time. So the Fed's balance sheet continues to deteriorate. That is equivalent to a tightening of money supply. And if you want to take a look at where money supply is on a historical basis, M2, that is all the money that is in circulation. This goes back to the 1960s. And this is percentage change year over year. If you look at M2 money supply out there, there's still historic amounts of money that's out there. We're off the highs, but this is a year over year change from the prior year. We have, in essence, crashed like we have never, ever seen before. And this is why you're seeing banks go belly up, and they're still tightening. How do we know? Well, we know this was released this evening, reported as of yesterday. This is what the Federal Reserve or the market participants expect for a rate hike in July, 99.6%. The Federal Reserve never disappoints the markets. They are going to deliver on what the markets expect. And when you take a look at months moving forward, because you may be saying, Bob, maybe it's just one last time they get it. I don't know. Let's go take a look at September. I mean, here's where we're at: 5.25 or 5.5 basis points. Well, it looks as though they're going to Right now, they're expecting a pause right now going out into September. Maybe this will ripple. This has changed. I will say that. Where were we a couple of days ago? One day ago. Yeah, this is grinding up higher. That they're expecting the Federal Reserve to pause in September. Let's go to November. Okay, so the probabilities are coming down into September and November. These were higher a couple of days ago. So that's interesting. But when you take a look at December, and this could now change in the coming days, clearly markets are still pricing in a Fed increase. But given the fact that they have now downgraded September and November, that might change. That might change. Okay, interesting. But we are going to get a Fed rate hike next week because the markets say so. So beware of strong economic data because that could drive these numbers up higher or the probabilities of future rate hikes up higher. 631. I got to get moving here. Waves of inflation. So this goes back to the 1970s. You know, everybody thinks you had one big surge of inflation, 70s into the 1980s, early 1980s. It wasn't. It came in waves. It went up, pulled back, went up, pulled back. And what they're saying is that we are here. We had the initial ramp up, and then we got this parabolic move up, then a pullback, then another parabolic blow off top. We're in the early stages of this, according to the markets, and it makes sense, or according to this, I should say, because think about it. The Federal Reserve right now, sorry about that. The market, I should say, is expecting one and done, no more rate hikes in the future. Okay. So what happens when Teamster wages go up? Because they're not going back to work until they get a hike. What happens when wages go up? What happens if commodity prices continue to drive up higher? What happens then? So we're going to take a look at the weekly charts in a moment, and we're going to talk about how these markets look. Are they expecting more inflation vis-a-vis inflation in commodities? We just bought BHP Billiton, one of our top stocks going into the new trading week. We've nibbled on a pullback, very small position. We're going to add on strength if we get strength. If we stop out, we stop out. But, and I really haven't looked at it. It was up today, as a matter of fact. I believe at the close, I believe it was up. So let's take a look at the weekly charts, and then we'll do some chart requests. Let's go to comments first. I know I threw a lot out there. Mark, welcome. Donnie, there's only one reason why anyone would want to see Sounds of Freedom. Amen. Amen, brother. Is the audio okay? Oh, boy. Is the audio okay, guys? Summarized. Did I summarize? I think I already summarized, no? Let me know if you need more summary of this, but I think I did it after you posted your comment. Gas is jumping up locally here. Yes, I saw that going into the new trading week. Pete, good evening, Pete. Mr. Pete. SOXS ran 11% today. Not shocked. Magnificent 7, yes, out of the triple Q names. Yep. This week is flying by. No joke. No joke. Yep. Those are the names. TF Hatter. No worries, brother. No worries. Netflix go woke go broke. The only reason why their guidance went up is because the writers' strike. They're not going to be spending as much on new content. So, you know, it was kind of lame excuse. I mean, they should have just been forthright. If you don't put out new content, You had 5.9 million new subscribers because you had a password adjustment where new other people can't sign up for the service unless they have, excuse me, other people can't use another person's access, so they had to get their own accounts. I mean, that's like a one and done, one quarter thing. I mean, they began that not this quarter, the quarter before that. So I don't know how they're going to repeat this, and I don't know how they're going to keep current subscribers if they don't bring on new content. So I think that's why Netflix sold off today. Bob, I will send you a link in the comment section about Rumble streaming training. Please, yeah. Thanks, TZ Barton. Please. Thank you, Bob. I appreciate you sharing those. Thank you, sir. Appreciate that, Seymour. Uh, can you see me yet? Bad man. Oh, yeah. Audio was just Grassley. Thank you. All right, cool. Oh, it was muted. Oh, I'm sorry. I'll share out the link so you can listen to it at your leisure. It's on Twitter. All right, let's go to the weekly charts. Dan, I appreciate your bravery to speak out on so many. Thank you, Dan. I mean, you can carry water for people, and you got to when you're on your last legs of life. I don't want to be that guy that didn't call it out, man. I mean, it's just it's disgusting. It's disgusting. I mean, there's a special place in hell for certain people, and you child traffic, you do things to children. Um, you should go straight to hell. I mean, long story short, let's talk about the weekly charts. This is not updated yet. Let me refresh. Hopefully, it's updated. Yield curve, freshly updated, still down on the week, but off the lows of the week. We were down 0.8 basis points yesterday. We're now down only 0.4 basis points on the week. Let's take a look at the monthly chart, how we're poised to close out the month. Only a few trading days left to go here. We're up on the month. I suspect that if earnings continue to disappoint the market, they can meet earnings expectations. But don't forget, most of these companies have guided down already. They've guided down, and you have a multiple on the S&P 500 of over 31. So they're not allowed to just meet. They need to beat to justify the current multiple on the S&P 500. Simple as that. And if they miss, well, you get days like today. Yields. So, I've been struggling with yields quite a bit. I haven't been able to understand. I've been able to wrap my head around why, if the Federal Reserve was continuing to raise rates, as I just showed you on the CME chart, going out and into December, why would yields be moving lower? And on the week now, they are now up on the week, which to me makes sense. Now, if economic data comes out weak, then the yields are going to have a hard time with rallying. And in fact, the markets may begin to expect a cut. Now, what if inflation data rears its ugly head? What does the market do when you have an economy that's declining and inflation going up? That's stagflation. We're going to talk about where you want to be in a stagflationary environment because there's money to be made. There's a lot of money to be made, but you can't be looking at IWM. You can't be looking at the triple Qs. So yields are up on the week. Bond prices are up, but now well off their highs. TIPS, Treasury Inflation Protected Securities. Now they are beginning to break out. So what are the tip markets? Treasury Inflation Protected Securities. Think about it. Why do people buy them? They're worried about inflation. So if the Federal Reserve is raising rates, why are the tips breaking out? They think that the Federal Reserve is not going to continue. And I just went over September, November, and December. And well, not December yet, but the September and November, it appears as though they are not going to raise rates. Doesn't look like a rate cut yet, but they do not appear ready to raise rates. So that's why you're beginning to see tips begin to break out. This makes sense. Daily chart. Nice consolidation here. So it looks as though the tips are probably going to move up higher. The US dollar. Let's make sure this is updated. It is not updated. This is as of yesterday, now of today. Um, I've been asked about gold mining stocks. Do I want to buy them here? Uh, they 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 appear to have bottomed out. They have rallied off the lows. I've been asked a few times about am I ready? Why am I not ready to go buying those stocks? Because it appears as though they're getting ready to move up higher. The reason why I have not is because of a couple of reasons. One, uh, if equities are as extended as I believe them to be, and we begin to see a sell-off, well, what's going to go down as well? You guessed it. It's going to be the uh, gold stocks. So also today, or on the week, I should say, the U.S. dollar did a big reversal. One trading day left to go. A lot can happen here, but right now the U.S. dollar is at the highs of the week. It spiked up today. What happened to the gold mining stocks? They dropped. I would imagine emerging markets dropped as well. We'll go to that in a moment. So the dollar, a strong week so far. Again, one trading day left to go. For the dollar to weaken, you need to have weakness or strength, I should say, in the euro. What do we have on the euro? Reversal at the 200 period moving average on a weekly time frame. What about the yen? It is also down, found resistance, resistance sold off. So right now it appears as though the dollar may have more room to run, at least in the very short term. The VIX. Now, the VIX contract, this had me mind boggled all day long. You take a look at the VIX contract right here, lower right box, and you could see that it was down all day long, down. Yet the VIX, and those options expire, I believe, on Monday. Yet the VIX index, this is a daily chart, broke out today. Let's take a look at a weekly chart. Bullish reversal bar off of support. So we may get higher highs here. That would be stock market bearish if the VIX moves up higher. The Dow transports. Now, this is where it gets good. One trading day left to go. However, weekly chart Dow transports. This is a massive breakout on a weekly time frame. We haven't been this high since early 2022. Daily view. We're very extended here. I think that it would be wise to probably scale out of some transports if you're a short-term trader. And I would be looking to short these names because you're going to get a pullback. But longer term, I mean, if we close out this week like this, sure, we might get a pullback. But if this market's able to hold up or the economy is able to hold up, well, then we can continue up higher here because you do have a reindustrialization of the United States. It's underway, but it's going to take years for that to happen. So right now, Dow Transport's looking good, shrugging off the Teamsters strike. Dow Jones Industrial Average on the week, it's up on the week and it's breaking out. So we could be seeing sector rotation. So I can come on here and I can say stock market crash. You got to sell everything, run for the hills. It's horrible out there. You're going to lose your shirt. Can't do it. I think that the S&P 500 is overbought. I think it's overbought because of a few very expensive names, and it's overvalued because of those same names. The however is that it doesn't mean that you're not going to see sector rotation from those names into other names that are thriving. And in this case, the Dow Jones looks pretty good. Let's see how it did on the day. It was up on the day. Yes, close off the highs of the day. Is this going to pull back soon? Yes, it's going to. We're probably going to short. What's the symbol? Oh, what is that symbol? DIA. DIA. We're probably short the diamonds. Members, get ready. Still strong volume here. But as we hit or go into 33,500, we're going to be looking to short the diamonds only for a quick swing trade. Few days, that's it. S&P 500. Weekly chart. Still up on the week. Yes, we faded off the highs. Daily view. Remember that this index is sporting a PE of over 31. I think we have more downside to go here. Might they give you a couple of opportunities to rally? You know, tomorrow morning we're probably going to wake up and the futures are probably going to be green. What are they doing right now? We're flat right now. I think that they're probably going to try to prime this market. They don't want people panicking on a couple of earnings reports. You have a lot more earnings to come out, but I always liken stock market behavior to the election, right? You have a couple of states that come out and they report, 20% of their vote, and all of a sudden the talking heads go, okay, we call this state for whatever candidate they call it for. The same is true because they can extrapolate. They understand you reach a certain threshold, there's no way to win. Now the same thing holds true for earnings season. We've already got an early snapshot of what's doing well, what's not doing well. Tech, not doing well. They're down. What did do well? The banks, they were up. And they're being rewarded for it. They broke out today. The banks were up today, closing at the highs of the session. So again, we're not going to come on here doom and gloom. The sky is falling, blah, blah, blah. There are certain sectors in this market that are extremely overvalued. They need to come in. They need to beat by a mile on earnings. If they don't, they're going to get punished. There's a certain expectation out there on Wall Street, and if they don't meet it, they're going to get beaten up. How's the volume on the week? Light volume on the banks. Let's see how they did on the day. They're becoming extended, but they could still move up higher here. Volume, good. Good day for the banks. Technology. Before we leave the banks, I want to see how Goldman Sachs did. Come on, Bob. Run your show like a pro. Can't do it. Okay. So Goldman was up. What's their implied volatility? We put on a strangle today, a deep out of the money strangle on Tesla. Small position, but we may add to it in the future. There's no premium here. All right. We're looking to put on new trades as these companies report. So we Meta, that's going to expire worthless tomorrow, and we did very, very well today with NVIDIA. We had a strangle there, and that strangle we rolled down the call side on. We're up on that, did very well. So today for us was a great day. Our shorts did very, very well. Strangles did very, very well. Technology is still up on the week. New all-time highs this week, but it's not holding it. One trading day left to go. Semis, bearish key reversal. Folks, not familiar with the terminology, bearish key reversal. 5-part video tutorial below, link below. Five top favorite candlestick patterns, free. Voted by nobody on the internet as the top 5 series on technical analysis. Nobody. Got to have a little bit of humor. I want to go to a daily chart of the semis. Gap down today. Makes sense. Note where the semis closed today. The semis closed right at the 20-period moving average. That has acted as a rising floor for the semis and many stocks as well. So I suspect that they're going to try to drive these markets up high. Big volume today, man. Holy cow. Let's see how we close out the day. 30-minute chart. I think they're going to probably try to pop the market tomorrow. Did they close this at any support levels? No. So we may go lower tomorrow morning. I'd be looking for support at 150.61 on the semis. Semis looking good. Yeah, I'll do it here. Here's a review. YouTube, you listening? Psst. Here's a review. TZ Burton, we saw Sound of Freedom. It's a powerful movie. Sounds good to me. Thumbs up here from the Contrarian Trader. Strike the video. Okay, moving on. LABU, of which we own a position, but it's a bearish week thus far after breaking out last week. Let's go to a daily view here. These are biotechs, not for the faint of heart. Gap down today. We got to avoid this, guys. I'm wanting to buy more, but it just hasn't broken out above resistance here. $6.64. Consumer staples, great week. We were talking about this earlier. It was consolidating. Nobody wanted the staples. Tech was doing great. And so who's going to buy the staples? But now they have broken out. Now that tech is seeing money rotate out. Money is flowing into the staples. Consumer discretionaries, bearish reversal bar. I'm looking to short these. Oh, should have shorted yesterday. God damn it. Emerging markets, bearish reversal week. Folks, be careful. I own this. I want to buy more, but not right now. I want to make sure the dollar is dead. And right now, the dollar has a very bullish candlestick on the week. Emerging markets will pull back further if the dollar moves up higher. Avoid right now. In fact, they will pull back with the rest of the market if equities continue to sell off. So be very careful here. Understand what does well in a volatile market environment. Now, energy is having a great week. So the overlaid here shows the correlation of energy to oil. It's 93% correlated. So my guess is that if we have a bullish reversal bar this week, top 5 favorite candlesticks, tutorial below, then I suspect that on oil, we are up on the week. And yes, we are. Folks, rising oil is inflationary. Remember, if we have a market right now, if the market participants are expecting a rate hike in July, but none in September and in November, well, what's going to happen to prices of energy? They're going to go up because the dollar is going to roll over. Bob, I was late today and 20 minutes into the beginning. What an awesome stream so far. And I agree 100%. Thanks so much for speaking. Thank you, my friend. My pleasure. Screen recorded because it's probably not going to be here after I log off. So they're probably going to strike this. So oil moving up higher, inflationary, natural gas moving up higher. This is a leveraged ETF. So let's bring up UNG. We want to be not hyperbolic here. UNG is up 4%. This is a major move. This is a breakout on nat gas. Folks, members, we may be going into natural gas as soon as tomorrow. Gasoline prices, big breakout this week. More inflation, up 4.4%. Slowing economy, consumers on the sidelines, yet gasoline prices breaking out. Gold, off the highs of the week. Bears key reversal bar today, so we watch. GDXJ weekly chart. And this is why I always say, if you're going to trade off of a weekly chart, wait till Friday. Wait till Friday to make your trade. Because if you would have been using a weekly chart this week to say, okay, I'm going to buy GDXJ when it closes above resistance at around 38.50, whatever this number is. If you bought yesterday, today you're sitting with a big fat loss. Wait for a close above resistance. So GDXJ, bearish reversal week. NUGT, bearish reversal week. I'm still bullish on these names longer term. I'm not bullish on the overall market, meaning the triple Q names. So if those names go, then you're going to see forced liquidation on the part of people that are on margin. So if you have forced liquidation of people that are on margin, what do they sell? Anything. It could be a stock that's making billions of dollars day after day. However, if that's all they could sell, they're going to sell that. It's going to put pressure on the stock market. And the gold mining stocks will not be saved. Go back to a chart of 2020, the sell-off there. Gold stocks should have been ripping up higher along with gold. They didn't. The dollar was ripping up higher. Gold stocks and gold took a hit. Gold took a minor hit. Gold stocks got hammered along with the rest of the stock market. Silver was higher, bearish reversal bar on the week. One trading day left to go. Maybe they'll rally back tomorrow. Silver miners, we are long of, still up on the week, but topping tail. Platinum, we sold. Good. That's a bearish reversal bar. We booked our profits there. Tesla, we now have a new position. We sold a strangle post earnings, got rid of that risk. No risk there. A very wide strangle. Lots of time decay. Cash flow strategy. Neutral strategy. What else? Netflix. We have no position here, but we may soon have a position on Netflix. Wide strangle, if not short. Meta, we have options here that we sold. They're going to expire worthless tomorrow. Congrats to members who joined in on that one. Amazon, we have no position. AI, we have no position. Rivian, we have no position, but want to. We wait until after earnings. Riot Blockchain, no position, but we're watching it. Okay, let's do some chart requests, and I got to go. I have reservations for 7:30 dinner. Ticker Cloud. Donnie. Okay, Donnie put his quotes in here. I'm going to go to members first. I only have a few minutes, folks, so pardon me if I can't get to all of them, but I will get to all members' requests. If you're not currently a member, please sign up for the 14-day free trial offer. Fire me if you want. What are we looking at? What do we want to do here, Bob? Okay. We're going to be using TrendSpider, folks. 35% discount code below. If you want AI, this is AI. Real AI. It works. So automated technical analysis. If you're not using this as part of your trading strategy, folks, you're missing a major arrow in your quiver. So we got FYBR. Donnie's making me work today. That's fine. I love to work. GFAI. FNGD. Okay. I'll take a couple of more from the gallery if you have them, but FYBR. Okay. Oh, we went over this one earlier. Yeah, Donnie. Right. Yeah, this is a monster reversal bar. I'm really liking this one. In fact, I like it so much that we're going to set up an alert here on the weekly chart. We're going to wait for a breakout. All right, and we're going to keep this active for a couple of weeks. We don't want any. All we care about is a breakout. We don't want to. We don't care if it touches. We want a closing breakout. FYBR, bullish key reversal bar, Stokes rising, momentum building, daily view. We were stopped at resistance today, Donnie. We may get a little bit of a retrace tomorrow, maybe down to this moving average here, 21 period moving average, to a lesser extent, the 20 period moving average on the Bollinger Bands, or maybe even down here. I'd be looking down at 16.22 per share, give or take a nickel, and I'd be a buyer. Nibble, and then I wait for that weekly breakout, and I would buy strength. GFAI. Wow, another one. Donnie's on fire today. GFIA was left for dead, and today this appears to be one trading day's worth of, yeah. So this is news driven, obviously. Broke out today, up nearly 40% on the day alone. We have recaptured support. What I would do here, you're going to get a bit of a retrace at some point in time. So I would definitely be a buyer at that support level. And that support level is at or around $5.42 daily chart. And again, you don't have to be on the spot. $5.42, $5.47. Fine. You're good. Here's an even better. And guys, I've never looked at this chart in my life, ever. I've never heard of the company. I did not draw these support and resistance levels. This is the AI. Link below. 35% discount code. I give it away free to silver and gold level members. Click of a button. Here you go. Here are the daily charts. If I want weekly resistance levels on my daily chart, I simply do this. There you go. If they were there, they would be overlaid. Here's a weekly moving average, the 21 period weekly moving average on the chart in dash line over here. 9 period moving average on a weekly chart. This is all overlaid onto the daily chart from the weekly chart. So we blew through in solid line several resistance levels today. I would create an alert down here, a little bit of resistance or sensitivity. GFAI. And you can nibble down there. I wouldn't get overly aggressive. But if your alert fires off, you're good to go. That's a good looking setup. Are my Bollinger Bands on? They are on. So yeah, look at where we're at here. Just be careful, Donnie. We're up and into the third standard deviation Bollinger Band. We're not supposed to be there. And we closed right at the top of a volume shelf. And this is why you never buy intraday. Always wait till the close. Because if you're bought up here at $8.10 by 4 p.m. Eastern Standard Time, you're sitting with a massive loss on a percentage basis and quite possibly on a dollar basis. Gee, I can't read my own handwriting. It's either M or a N. GN FNGB. FNG NGB. FNGB. Oh, D. FNGD. Finally got it. Okay. So this is a leveraged ETF, not for the faint of heart. Microsectors. Oh, look at this FANG index. Oh man, you had to show me this. Damn. Now I got to check out the IV. Sorry about that noise. What is it again? FNGD. No options. How dare you? That would have been great. Okay, so FNGD. This is an inverse ETF. So if FANG names drop, this does well. As you can see, it's up on the week with the FANG names down. Daily chart, strong day today. I'd be careful here. I'm not saying don't buy it. I'm not a big believer that markets just go straight down. I believe it's a process, a topping process. So I would, if you pull back to support down here at, let's say, $7.32, again, it doesn't have to be exact, nibble, nibble. And then if you are right, well, then you're going to start breaking out to new higher highs. You're going to get a continuation move up higher. Then I would start adding to that position. Not until then. Buy on the pullback. We'll probably get it tomorrow morning. We'll probably, the way it's looking right now in some of these, on these ETFs, it looks as though they're going to pull back tomorrow morning and then they're going to rally them into the trading day. So just be careful. Watch. I think that's it. Guys, I got to go. PSQH doesn't have a chart history, but jumped from $20 to $28 IPO today. Not sure how. Intraday chart. Intraday chart. 15-minute. Fundstrat Tom Lee says S&P 500 could reach 5,000 by the end of the yeah. You know, he made a call on Bitcoin. I like Tom Lee, but he makes some ridiculous calls. He had some ridiculous call on Bitcoin a few years ago, and by the end of the year, by the time when he made that call, he expected it to be up. It pulled back from the time he made that call. So I'm not perfect, but he's not either. Guys, I got to blow out of here. I got reservations. I got to take off. Have a great night. Thanks for being here. Like, subscribe if it matters. They're probably going to black this video and take it off. So thanks for being here. Have a great night. Be well.